Still focused on earnings, and let's try and connect back with Dilip Piramal, the chairman at V.I.P Industries. Dilip, hi, morning. What a stellar revenue growth it has been, despite you mentioning in our last conversation that festive season was a bit tepid. So what has aided this growth for you?
I think, well, obviously the market is good and we are getting a good market share from the unorganized, I feel, because all the companies are doing well, sales of all the companies are growing well. And so I guess that is the conclusion. And also the share of backpacks and the smaller items is increasing very rapidly. In fact, in this quarter, our volume growth is higher than our 28% sales growth. So that indicates that the smaller items are growing very fast, and I guess after the GST we have got a good amount of market share from the unorganized sector, particularly in these backpacks and other smaller items.
Mr. Piramal, tell us what exactly has been the volume growth. You spoke about some of your categories, but across different product categories, can you just spell out the kind of volume growth we've witnessed in Q3?
I don't have individual figures in the various categories because that's fairly complicated. But because our volume growth is more than our sales growth, our volume growth is about 29%. So that obviously means that the smaller items have grown slightly better. So that is a good indication. And
okay, fair enough. Won't delve it too much into those numbers, but in the quarter gone by, Mr. Piramal, the speed breaker came in the form of higher costs. That seems to have hit your margins. Can you tell us a little bit more about what the rise that you witnessed? What is the outlook that you are seeing now for your margins going forward?
Well, this is something which I had cautioned you all earlier, that there is a slight speed breaker in this quarter. So what has happened is that the rupee has depreciated by 11% as against the corresponding quarter last year. And in addition to that, there has been a 5% additional import duty. And we do import quite a lot of stuff from China. So the costs definitely have gone up. And costs and all our other expenses have also gone up. So margins are under quite a lot of strain. And this trend will continue in the current quarter. But I think in the next quarter, we will get back a good portion of our lost margins.
Okay, so a final word then on your strategy on pricing in the light of the input cost movement right now.
We will take some price increase, and competition is quite severe, especially at the lower end. So no one wants to lose market share, and everyone is gaining market share from the unorganized sector. So I'm very confident that once sales are very good, as we have been experiencing in this entire 9 months, in this entire year, that is a very, very strong base. That creates your base, makes your base very large. And it shows the underlying strength of the economy and of our sector particularly. We are dependent on the tourism sector to a great extent, and of course to general economy, and that is growing extremely well. In fact, tourism is increasing. All modes of travel are increasing, like air travel, train travel, even road travel. So that gives me a lot of confidence about our future, about the future of our business.
All right, on that optimistic note then, we'll wind it down right here on the show. Thanks so much for joining in and giving us a heads up on the quarter gone by.